but that is an example of how this works when you know, follow the system and keep up with it. Okay, Anova International, we had a spike in price followed by a shakeout. Look at this enormous shakeout. If we look at this on a weekly chart, you're going to see that this one is more or less in a box right now. And so if this makes a new high, then you have a new box formed. This would be a breakout buy right above here around 86.18, and you'd put your stop loss down here around $80, slightly below this area. Using this formula that I wrote, which by the way, I'll share with you if you ask. It's actually available on Trader's View, but they banned me. So, I mean, Trader's View is a pain in the ass. I love their software though. I still use it. I'm actually a subscriber. So what this does is this helps me determine the risk, dollar amount risk in any particular trade. And I use average true range for the week in order to do it. So I take an 8-day average, 4 times multiplier, and I want to risk $200. You can put any number in here you want based on your account size. I don't like risking more than $200 regardless of my account size. So this tells me that I'm going to buy 22 shares. Now, if I buy 22 shares and this stock goes against me, if it gets below this area here and I sell it,